Hello, good morning. Welcome to another ES Futures trading stream. Today is Wednesday, March 20th. It is 9:13 a.m. Eastern time in the US. Alright. Yeah. We are coming from a day. We are coming. Yesterday, notice can you see the shape of this? You know, what kind of thing we are having here. Let's do this again. Let's grab this. One of the first things that I noticed here, this is really low volume we have yesterday. Really low volume. Relative to the last 10 days is, it's, oh come on. It is in the lower side. Now, notice what do you have here, right? That's one thing. What I am carrying, one of the most my main things that I am carrying is these lows here. How this market has used this. This is important. The level here. When I highlight this, for example, these areas, check the level on the side, right? I have another thing here. 2 days. By itself, these 2 days may not mean that much, but when you put these two together, there's no excess here really, and also it was bought for a previous all-time high, which we will see in the next. We will talk about that also. There's no excess here. Also, there's this low is poor, and yesterday, this day also has no excess. That's for the lower side, the lower part of the market, right? Now, if we check the upper side, look what we have here. No excess here. 1, 2, 3, 4, 5 days all together here, which make this area really, exponentially weak. This area here, very weak. And why I say exponential? Because there's just imagine what you have here, right? What you have here, what you have above this area. You got a bunch of stops here. There's a lot of stops in this area. If anything happened today, we have FOMC today. If this area is taken, you stick it to the upside, this could have a big jump here to the upside. For how long, how much, who knows? That's one thing. Also, if this happens, remember what we have down here, right? What we have down here. All this structure is very questionable. And I'm talking just about the last 19 days, because we have to remember the ES is an index. The ES is an index. It's not a stock. It's not a company, and it's an index that has 500 companies on it. And it's used to hedge, it's used to go long or short. It is easier to allocate money to buy stocks using this index, for example, right? Than to just go straight and buy cash one stock or the other. The monthly, weekly are trending higher. There's no change in these two time frames. The daily, this is the range that we were talking about, the 19-day range. Right? But when we check the daily here, we were talking yesterday about this level here, how this market has been trading. Now we got a breakout, then bought from the breakout, breakout, bought from the breakout, 1, 2, 3, 4 times. This is the level I have. We just saw. In market profiles, I have only this part. Now then, breakout, check, remove the inventory, bought from this level again. How many days, how long this trade or this action took to develop? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Then next time, breakout, bought from this breakout. Again, wow. This time it doesn't take that much, right? 1, 2, 3, 4, 5. Now next time, 1, 2, 3, 4, 5, again high. Now, what the heck, right? I'm not going to wait that much time. I know that this market is going to be bought from this. I know the market is going to be. And the next time, because I figured out the market, right? I am a genius. I figured out the market. We are going to have a breakout here. The market is going to take this high, and then it's going to come back here, and then from here we are going to go higher. Man, finally, I finally figured out the market. When I start thinking like that, when traders start thinking like that, I just have to be very careful, right? Because if I see this, many people, most traders will also see this. They will feel super confident, they will get cocky, I know how this market is reacting. We also were talking about, pick your trend line yesterday. We just extended this trend line. That one was one, and the other one was this specific level here. We just extended to the line. Okay, the market may find buyers here in this area here. I'm not in this market to predict anything. It just happened that way. And what this kind of action does, actually, it's a huge, not a red flag, but a big warning sign for me. I have to be very careful with what I do moving forward, because this kind of behavior has been repeating over and over and over and over and over again. It doesn't mean I'm going to go short, but I got to be very careful here trading. Markets, there's a trade. When markets make new highs, there are programs that buy here. Just keep going higher. But then something is changing here. If you have noticed, usually these breakouts happen at the end of the week. You had a week. It usually was kind of like on this side, the last day, that we had a breakout and always closing at highs. It didn't happen. The last 2 Fridays, it wasn't the case. So there is some change going on there too. It doesn't mean anything. Those are just observations that I'm doing, right? You can have your own. It is really good. It would be really good for you if you can have your own observations as well. Just take note of that, and then as the market develops, just keep adjusting. Keep adjusting. You will see the things that some things work, some things don't work, and just keep doing adjustments. That is something that James says, that if we are break even at the end of the second year of trading, once we start reading markets or using market profiles, you will be doing a great job. I didn't understand that. When the first time when I hear that was very, I kind of like, it put me down, right? Because I thought, man, that long, and it's not even that. That's just to break even. And that's when I understood why that is because it actually gives you, you know, we have this false sense of confidence that we are going to make huge amounts of money here. Right, as soon as we enter the market, as soon as we start trading, I'm going to quit my job, I'm going to close my business because I'm going to become millionaire if I start trading. But we don't realize, but we have to learn. We have to learn. There's a lot of cycles here in this business. There's intraday cycles. We saw how inventory get long, shorts in the intraday, for example, which is the area where I am focused. There are daily cycles, there are weekly, there are monthly cycles, there are quarterly cycles, which are the contracts, right, the last 3 months, and also there are yearly cycles, and there's also bigger ones, right? I can call it maybe we are at the end of the 4-year cycle of another 4-year cycle here. We talk about this at the end of the year. That I noticed some change. Hey, yeah, how you doing, Moro? I have noticed something change in March, and coming into this year, this is an election year here in the United States, and there is a lot of interest here that can be, that can get that can be in the market now. I don't know for sure, but I have that thing, that feeling, right? It's playing out. The market just keep going higher, higher, higher. Once markets start making new highs, you just keep doing highs after highs after highs after highs. I guess there was, I don't know, maybe like 20 years ago, the AES made like 64 highs, right? So why you go against the trend? Why keep shorting? Because just because I think the market is too high, or because I see the structure is really weak. There is still a lot of things until I see 80, anything here. I won't do anything just in expectation of something we have. So eventually this market will have a correction, but until that happens, until I see that, I won't do anything to the downside. In this case, trends are higher, right? These markets are higher, 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 and this market is trading in range. And look at this, just a tiny correction, a minor pullback to 5%, which is all this inventory that we have from this line here. Just a tiny, but I consider that not even a meaningful correction, but some realistic pullback, right? We'll take the market to 5,000, to this level here. And this is 5% from these highs. And 7% here. And even if the market has this 10% correction all the way down to here, which is where all this, where I believe everything started, all this rally. It started down here, but it really gained momentum around this area, from this area. That would be 10%. And still, it is above the 200 moving average, really far from that, but it's still positive. This something market coming down to his would be, and actually something good for the market, for the rally that is sustaining here. Notice how kind of like parabolic this rally has been. This is the monthly, this is the weekly. I guess I am starting these streams too late now. I don't have too much time, man. This area, the 5193, is something that I am checking for today. We have FOMC. Look at what's happening to gold. This is the firecracker effect. The potential for firecracker effect here is huge in this market. This is gold. This is what firecracker effect looks like. The bond market, I keep an eye on this market, especially today. What's going on? It has been having some really narrow ranges after this break which has removed all this inventory. Notice the trend here, it's trending lower, with some short covering rallies here, right? This has been interesting. This look that this was serious, yeah, compared to this one here. 2 minutes before the opening. Now, what the other indices are, how the other charts look like. Yesterday we were talking about how the Dow look. If this market took this level, they were good. Also, market can make new highs, exponentially weak highs. Good. Also, this market can have a spike here. There's 1, 2, 3, 4, 5 highs. Same goes with Nasdaq, and the weakest is, it seems like this may have started a trend. We'll see here. This is the closer. What's happening with big tech? And some short covering here. This is huge spike to the upside. Google. Earnings, we are just, knocking the earnings here. Maybe 1 more week or 2 more weeks, banks will start to report. This is no good here. This is super dangerous. This is getting some range here. This can still. I won't touch this too, man. Nvidia now has potential to resume the rally. The 1,000 is just right. I think this market will stay up here until they split. Tesla doesn't look good. All right. Now, what's happening with overnight inventory? Well, from yesterday, the market's open now. It was a very emotional day yesterday. 5 distributions. FOMC today at 2 p.m. Chairman Powell at 2:30. 5 distributions yesterday. 5 distributions, sign of emotional markets. Traders, buying, getting caught by FOMO, shorts being forced to cover. Very, very emotional. Very emotional here. Inventory is mostly short. Notice how big this POC here is. Did the market open with a gap? Oh, no. Market open inside previous range. I was checking this one. This is yesterday. Market open with inside previous range, which increases the odds of rotation. I open right here. Those want to think about this. I had my doubts yesterday to consider this a spike yesterday. Technically, it would be a spike. The market closed above yesterday's range, but I think this. I have doubts, so many doubts here to label this the late action as a spike. It just didn't have it. The spike just, what happened with the spike is the spikes take previous day high or previous day low and just keep going higher, or lower with conviction. That didn't happen yesterday. I didn't see that yesterday. And that's why I am not calling this a spike. Nasdaq, boy, the weakness in Nasdaq is really evident. This period was bought from half back. From previous period low, half back here, previous day low. I question this market the most. However, that being said, the high of Nasdaq, was exactly at POC. There's one tick from POC, which increases the odds of upside continuations. The sellers that come into this market yesterday were not the strongest hands that one can find. Right? It didn't speak well. It looks like the action to the upside has not been completed yet in that market. Now, let me take a screenshot of this so I can put in my homework and label, and I started doing it right now. Okay. What I'm going to do here, I'm going to do to my now opening inside previous day range increases the auto chop and rotation. Okay, even though right now I know the market closed at the upper side of the range. It closed at the upper side of the range. But what we had yesterday, I questioned the rally too emotional yesterday. Just give me a second. I have to read your. Yeah. I have just read. Let me. Inventory is short. Inventory is mostly short. Very prominent, right? Very prominent overnight POC. And why I write these things, I started to write it because in that way it goes to the background. It keeps longer in my short. I can store for longer time in my short-term memory. Now you say. If yesterday looked like a short covering, I wouldn't say that short covering. You do have this shape, right? Come on. You do have this. You have the accumulation here on the upper side, but short covering would be more like market shooting its way up. First period, second period, whatever, shooting goes up, and then accumulating here. Something like that happened. If I open this profile, but it wasn't one thing, right? This one looks the shape, but it's not. It's not a shape. Right? It's not a shape by how it is made. What about this? No, I don't see any here. This might look like no, that's not. What about this? No, this not. This isn't late. Okay, so we have something here. No, not here either. No, we have, not that I can see now. All right, the market is coming back to check overnight POC. Did yesterday another? Let's see if we have another. Oh yeah, you got another comment there. Now, what is the first thing the traders may have in mind now? Boy, I'm not going to lose this trade now. We have all these highs here, This market is going to have a breakout here. It's going to shoot to the upside, right? Come on, man. Something from the beginning. Look at this here. This is the lowest volume in the last 10 days. Because this chart, what I have this volume here, I have the last, 10 days. Last, really, it doesn't speak well. Oh, what is happening now? This can very well be a counteraction to overnight inventory. Most of this has been taken. I have this level here, the 5230, as a support because of what happened yesterday. What happened yesterday in JKL, I don't count M because that's, M is almost the same as A. This is the opening and this is the closing. But there was some significant activity around this level, in multiple periods, right? It's not what happened here or here, but the repetitive behavior. I saw something interesting going on here. Oh, and by the way, this happens to be POC 3150. Yeah, almost POC. Okay. And the field sign was changed. Field sign was changed. Everything is to the upside now. It remains to the upside. Yesterday, for example, one thing, we have an outside day. The market opened here, explored below this range, and not just came back into the range, but closed above. The closing was above yesterday's high. That particular finish, that particular closing is what makes this day an outside day to the upside. Okay, this is a day to the upside. Now, upside continuation, we see the market trading inside or building value in this area here. The field sign change may be closing these distributions, which I don't think is that bad. It can even close this one. You can even close this one, but not this one. Okay, not the last one. Closing the last one, and look at this, right? Even coming all the way down to here, keeps the market, keeps adding value to this area, and it's still inside this day here. Coming all the way down here and closing this distribution really puts this low in question, right? Inside. But let's not look too much. That's one thing, right? That's one thing that can happen to the downside. But right now, the market is working its way up to this high here. I think this is what the market is focused now. This may have been very well a counteraction to this overnight. Wait a minute, this is not a counteraction. Wait a minute, because inventory was short, right? Inventory was short and the market is trying to trade in the direction of the overnight session. Okay. Oh, when was this? There's something I want to. Oh, it was yesterday. Oh, okay. When the trade comes to you, this is something that you will learn also, but we have to get rid of biases to see, right? Yesterday we were talking about how the session didn't have any direction, okay? Any direction here. Even C started to give the market some direction, right? I remember I was thinking about this. It's something I forgot. As soon about later, I don't know how long after the stream was over, I just thought something about something, and I said, wait a minute, okay? It's something like just comes, I slap you in the face, right? You say, wait a minute, value is lower. When the market was down here, value was lower. The gap has been closed, which is not good. Market is there's change. Gap was closed with another gap, which is uncertainty, but this is starting to look like a trending day, right? Even though we have narrow ranges, we are in the 4th period, and now this low has been taken. This is super weak. This is very questionable. This is also very questionable, but regardless, it looks like a trending day. And you start to think, what is happening here, right? value is lower. You trade in the direction of value. The best odds are when you trade in the direction of the value. Sell rallies, right? But what? Wait a minute, right? You got something here. And we have this level here, which was the 29, which at the time was halved. That's when this level becomes very important, very relevant. When that's when you remember, because you do your homework, and the same way as you, but in this case, as I start, I just this is what I did. Let me show you what I did right now. Something very simple, very simple, right? Put the seed and right. Inventory small short, very prominent. It's just like that, right? And what I got up here from that day, on this day, I think this one here, and I wasn't present here. I wasn't here when the market traded. I did a replay to see how this profile formed, and that's why I noticed this was Halbach was down here, but at the time all this started happening from here. And when you see something, you say, wait a minute, right? What the market can be doing? And was aiming to this all this inventory was removed yesterday. Very questionable for me because it's one day previous to FOMC, very emotional as well. And that was a potential destination of this trade. And then the market just keep going higher, and you ask something like, is this the laggard stage? Is this late majority or early majority? Something like that, right? And that will all depend on your observation, what you have watched before and what you are watching now. Where this market, where traders can be looking at, for example, right? Okay, traders first things first. Coming back inside, maybe this may be what they are looking, this high, or even this one. But to get up here, first the market needs to go here. Having this high out, there's tremendous potential to the upside, right? You have stops here. It didn't develop yesterday, okay? But the trade, that this could have been very well. This 29 could be very well the end of that. It has some upside extension. Right? But that was it. Then after that, you start to see the market going back and forth, right? And most part of the time, this is what misleads traders. Traders just keep shorting the market. Why? Because value was lower, because it's going too high, whatever thing. We never know, right? That we never know. And this happened, more often than we expect, right? Market finally has a pullback, removes these lows here. Okay, I got my short here. Now this market is coming back all the way down to here. Just without the understanding of action theory, right? This could be just a rebalancing of this market that has got too long, some rebalancing here, and often the market closes at highs. It doesn't mean that it's going to keep going higher. Many times there is some, these longs are removed right away in the overnight session. But I think the FOMC has something to do about that. Something to do has a lot to do what happened yesterday and what's happening right now. Okay, these pullbacks are very. We also talked about this in Discord, right? This could be very misleading. Jim talks about this all the time, and of course I know better, right? Yeah, Jim doesn't know anything. I'm going to go short here. As soon as I short this market here, I find myself in, underwater. Waiting for the market to come back way up here. The market is going to come back here, right? And the market just keep rallying. And as soon as I close my short, the market breaks, right? Or the overnight, the market retraces all this range, right? And what what is the logical way to think? You know, quote unquote logical. Boy, I was just too soon. My shot was too soon. I was right, but I was too soon. That is a bias as well. I wasn't right. I was wrong. Plain and simply, I was wrong. That wasn't good. I was wrong. You know, we don't want to be wrong. We don't like to lose. But that's something that we need to learn to do it here, because that will save us a lot of problems. But unfortunately, that's something that cannot be teach. We have to. We all go through the same thing. You know, it's unbelievable how everyone of us go through the same thing. It doesn't matter how many times somebody tells you what's happening or what can happen. You need to go through that. And I think that's something that Jim can improve. What is there are these prop films like Top Step, Apex, and there's more like, which ones are these? Apex, Top Step. There are more. I don't have those ones right now with me. But you can it is not the same, right? They can provide you with, they look for traders, quote unquote, look for traders, but the business is sell, right? Sell the trials. They give you opportunity to try, but you risk something because they give you, some capital, right? Some fictional capital like 3,000. If you lose 3,000, you have to reset or wait for a month for the program to reset itself. But it allows you to use your strategy to get in touch in the market, and you have something there, right? This trial can be $30, this trial can be $50, this trial can be $100 or $150 or $250, whatever amount of money you decide to put there. But at least it's something. It's not pure fiction, right? And that can help. I wish I would have known. I mean, I knew about these companies, but my thinking was, okay, I can do it. I don't need them. But in the process, I lost a ton of money. You can give them a try as well. Those guys, for example. Okay, I can talk. If you're interested, we can talk about it later. But let's focus on the market now. So the fact that we go back to K-top reference and we go to the upside, something have changed all the way. Like hand went from short to long via bias odds. Top K. When you talk about Top K, are you talking about this one? Oh, you're talking about this one. Yeah. No. I mean, this is the information I was carrying for the next day, that the movement, right? The movement that happened here, I guess the overnight came all the way down to here, I don't know. The movement that happened here came exactly from Halbach. It's like, for example, the market yesterday did a lot of things, right? A lot of things about the 5200. All this inventory, the same thing that happened here to the downside, coming exactly from Halbach. Right now, where Halbach is. Halbach is right here, right? But it has only one period, right? Only one period. This day, it has 1, 2, 3, 6, 9, 11 periods. 10 periods before this one sold from exactly Halbach. Yesterday you asked something about, how do we know we have bigger time frame traders or bigger capital. We don't know, right? We don't know about that. We know that they are present when we don't know, actually, right? And this is not them buying. This is these are short time frame trading is very high. Just short term traders. Short term traders are not, are not, uh, you know, uh, identified as people or as participants that can hold inventory for longer periods of times or are in the market to stay. That's why there are short-term trades. If the trade doesn't work, we just close, right? And they also, this market was coming back to here, but not that bad, right? Now, the same thing is happening now to the upside. How many times? Back and forth around the 5,200. The same, it is the same. Nothing has changed in this market. It is having the same, it's trading in the same way, even way before this day that I have here. Sometimes you will see something, like for example, and this is something that Jim also talked. I don't remember where this, I guess it was here. No, maybe this day. No, man. Or this one, what happened here? No. But there was something very obvious when the market, when the market has the market had a really nice selling pressure to the downside, like boom, 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 and starts selling, and just stops, right? The movement stopping in its tracks. It just stopped. It's just like it hit something. And you need to be in the market. You need to be watching, witnessing what's happening to learn that. Maybe the first time you won't catch it. You can do a replay. Or maybe the next time, okay, this was it, or I missed it. Then the third time, okay, you see, hey, I got this. Then you see that kind of reaction, right? And that's how you learn these things. Right? It doesn't mean I'm going to buy them, right? But that thing, right? That thing is also why I have this day here. This what happened here, for example, in M, even though it was the closing, because this day the market was just pushing, and it just couldn't get it, right? What happened here in this area? What happened here? And that's why I'm giving these arrows here. That's why I decided to keep this level as a reference. Now, there was something here, right, which was different. I consider this a rebalancing on the inventory. The action to the upside has not been completed. You can call also this late pullback low, for example, right? Late pullback low here. Let's call it that here. Well, this would be a sign of change. And why I didn't label this? Because I have this distribution here, and this one here as well. Right? It's quite obvious here. I got multiple. I got other things to look at. Right? That make me remember this level. Which one of these is closing this distribution. It's a really narrow range. Market shouldn't have any problems going through this range. It's like how many ticks? Like 6 ticks, right? And also it has a POC here. This day's POC. Okay. And the emotional trading that happened here after FOMC. Two things can happen, all right? Two things can happen. This inventory, this action here can be, the market, 2 o'clock, this market can happen. A big break here, all the way down to here. Maybe down to here, be bought from here. Maybe even all the way down to here, but being bought from this level, or all the way down to here. That's one thing. And the other one, it can shoot this way up from here all the way, let's call it If, assuming for example, it is right now 40, it can come to 80. 40 points for that kind of market is nothing. Right? It can come all the way up to here, for example. Right? Why is I 80? I could have said 70, right? But 80 is kind of close to the 92, which is another century number, another logical place to sell, where this market can find sellers. Nasdaq is having a correction. This market was way weaker than this. What we have here is the motions running high, but this was very mechanical. And the risk here in this market is all the way down to here. And if this market breaks, it can, I don't know, it can break the ES. But lately, these two markets have not been, were not being trading as in C. One was the leading. There was, I think the ES is the leading now. I think Nasdaq was trading in sympathy yesterday. No, it's unbelievable. Unbelievable now how this market being this up, this high, and having a lot of chop here. A lot of back and forth, a lot of back and forth here, a lot of back and forth in this area. A lot of back and forth, even though it's at the highs. It is an inside day. This is a very wide range. This kind of openings usually are expected the closer the market opens to the center. And there's a lot of back and forth, when the market opens here. There are better also for the market having upside continuation when it opens at the highs. But as I say, what I question here is this, how the day has here. I have my doubts of calling, okay? I have second thoughts about calling this a spike yesterday. Just a minute, please. Oh boy, look at the volume we have here. Really low volume. Yeah, and this is something that you can use also, or something that I use, for example, right? This is, I started to watch, man, this day has really low volume here, okay? Really low, it doesn't look good, right? And it's through observation that you decide to keep, for example, keep this one, pay attention to this one, when you ignore this one. Jim has it here, what it is, resources, right? Oh, here, right, minus 70%. You can see developing here, this is what already has. So far, if you have update this, is 405 now. Yesterday you expect 765. But one day, man, I saw crazy numbers here, like 90%. What? Okay, wait a minute, this is, I saw 0 here. Cause what happened here? I decided, well, okay, I need to find another what he's using, right? What is his source? So I decided to, maybe I can find myself also something. And I find this, which is very similar, right? For example, right now we have 415 here. In this one, how much do you have here now? 430. It's not bad. I can say the same. right? And I use. This is kind of more. I don't need to do the calculations here, right? I know, for example, if if I move this line higher here, this is what is expected, which will be 700. It won't be 760, but this will be higher here. This would be higher. Okay. If I see the same, okay, to keep it lower here, this needs to be lower actually. Right? That's how I check this. But I build that with practice. And you choose yours. You will find yours as well. This is New York Stock Exchange Composite Poly. Yes, I have my doubts, man. I have my doubts. And now, if that is a spike, if this was a spike, what I'm seeing now is, right, first the market open inside the spike, right? If that was, but it's trading, and the value is building. Like it's not. How can label? This is nothing clear here, right? There's nothing clear here. And anyway, maybe the spike is being rejected. So if the market keeps going, but value is higher. My bad. Value is inside value, and it has good odds. What are the odds now, for example, for value to be lower? Right? The market needs a big break to be lower. So far, it's inside. It has better odds. There are better odds for value to develop overlapping high to higher, right as the market is right now. Right, that can happen to value. It has better odds. It has higher odds right now even to close as an inside value, and that will be a market imbalance. Now we have FOMC at 2 p.m. So I would consider 2 p.m. as the beginning of a new session, right? When especially after I saw here, I think there's nobody here. If inventory keeps getting long here, being bought, then come back, bought, come back, there could be some correction here actually, before the date, before the announcement. There could be some correction that can bring the market, that can close this one, this distribution, and kind of like bring the market to the center of this range, and that will be even more, just imagine, right? Just imagine this. The potential sequential here also it has good odds, right? What about the market keeps going higher, but this is brought back, it brought back. Bigger traders can see this thing. This inventory getting long. They know this inventory here, and they can sell on that. Remove this inventory, and that's the trade. Just removing that inventory, and that fact can bring the market to the center of the range here. And by doing that, we put the market here, put price here, and what do we have here? What do we have here, right? Below here as well. The potential, is even more uncertain, right? The uncertainty here is it can go in either direction, 50-50 here. And the expectation is the market, the Fed is not going to do anything this month, right? So all eyes are rather on Chairman Powell press conference today. I guess I'm thinking to take a break. I'll come back later today. It's very rare that we have opportunities today, especially after this kind of action. But we never know. That's the thing. We never know. But nobody knows, right? Nobody knows. This is mostly odd based. And I think what you are doing is good. You're building You're getting to know yourself, having an opinion on the market, and you don't have to agree with me. You don't have to agree with Jim or with any other trader. The best thing you can do is to have your own opinion. When you start having that, building that, what actually happened, I will be in the way. I will get in the way. And you will need some time by yourself to develop that. You may fail, you may struggle at the beginning until you grab into something and you start to developing that. Then you come back. Then you come back and then go back to check with Jim, for example, and you won't have that influence anymore because it will be yours now. It will be yours now. It's like, I think when you say you are old, I'm not saying I'm young because I am also old. I have children, and when you raise your children, when you raise your kids, you don't understand when you are a kid yourself. You don't understand your parents, and then you go through that process, and finally, at one moment, you can I know what my father. Now I understand my father, and then you can look him at the eyes. You can talk, man to man. You can see him as your equal. He's not that bad, right? He's not an idiot. He's not an old-fashioned, and all the things that we have tendency to think about people, about our parents when we are young. There is always potential. Regarding FOMC, there is always potential. FOMC have a tendency to bring volatility to markets. Especially, I pay more special attention to what actually when that date has the chairman power. What it is? Let me bring that back. Come on, where that thing is? Wait a minute. Okay. Economic calendar. Okay. Here. We have FOMC here. Especially when we had a Chairman Powell press conference afterwards. You will see. You say you have CNBC. That can be also found in YouTube. You have, or you can go to Fed Reserve. It will be here. It will be here. They will have the link here that will connect you to YouTube, for example. Continue here. And you will have a link here, with the press conference live. And you can listen to him. You can listen to him. The first part is the speech, and then there's a round of questions. Sometimes during the round of questions is when it becomes interesting. You will see the market move back and forward when he's speaking. Also moving back a lot. Market doing a lot of things after this. It's very hard to trade. I don't trade these things. It's very, very hard. But they can give you a glimpse of what the situation is, right? If we have, for example, 2 p.m. an action like this, that takes the market to the upside, takes this high, and it keeps trading way up here. Right? And then coming, knowing exactly that it came from halfback, like it did here, but in this case to the upside, right? Okay, you understand, right? Who is behind that trade? Who is behind that trade? You understand what can happen. What happened to these guys here, or what can happen to the. But it's not a copy and paste. movement, right? Because unfortunately, if it was that easy, everybody will be doing lots of money here. It's not like that, but it can give you some idea, right? Some about the current state of the inventory, what's going on behind price. Sometimes you get corrected the same day, sometimes takes 1-2 days, sometimes it's never corrected. It's not as easy as saying, okay, this is exactly like yesterday, but this time to the upside. So now everything is going to be exactly like yesterday, but in the opposite direction. I wish it was like that, but unfortunately it's not. Now we are having we are having an inside date right now. My bad. An inside bar, not an inside day, an inside bar. What we have yesterday. Okay, okay, you got my attention. We have an inside bar here, but this was more like a balance. We're having, this is a smaller range, a narrower range, but still we have like 15 more minutes, a very low volume here. With this continuous is going to be, yeah, it's going to be something like this, right? Notice what it was yesterday. Well, this thing was in this day, way up here, right? Let's compare with this really low volume. Even lower, my friend, even lower than the lowest day, even lower than this, right? And that this is something, for example, I mean, G doesn't have that, but G gives you, but what is happening right now, just he compares to the previous day. I'm not saying this is better, all right, because sometimes it can be just too much information, but I can see here, for example, okay, this is a really low volume, right? Is that relevant? Is that, do I have more here by knowing that, or just knowing that it's lower than yesterday? You keep, by observations, you keep, you give the weight to that. You keep that piece of information, the relative weight, based on observation. If you do that one assessment today, you watch the same thing tomorrow, or the day after tomorrow, or down the road, and you say, okay, it doesn't matter, right? It doesn't matter that much. It doesn't matter. It's not that relevant, for example. So I can very well just compare to yesterday and still be fine. But it will depend on what kind of trading you do. You are having your opinion, you are building your opinion, and how that impacts, what's the impact that observation may have in your plan. And we all are different. The only one who matters here is you, nobody else. Something that I don't like also, and that's why I am not in these trading rooms, and also that's why I also like. That's something that I highlight from Jim as well. Putting, posting screenshots of your wins, I think that's a worst thing. It is very negative, right? Because that's something that's a bias too. That's resultism. That's something that's called resultism. It's not a decision. It's not a decision that you are watching there, but the results of your decision. Right, and that's what's matter. Okay, what decision you do. Right? I will do this based on this, right? what are the thoughts that are behind your decision. That is what matters, because a lot of times the results will not be good, but the decision is good. That means if you keep doing the same thing over and over, you will be fine. But if you make a bad decision and the results are good, that's really dangerous. And you're stepping into, what's the name? Muddy waters or something like that, right? It's something very risky there. There's a famous example that is used that everybody, and it is because everybody knows, right? Everybody has heard or watched this event, is the decision, that Pete Carroll in Super Bowl, I don't know what Super Bowl, but it was Seahawks against Patriots. I think it was 50, I can't remember what Super Bowl was. But this was the last play, right? I guess they were tied 1 point behind the Patriots, and they were in the yard. Just they need to go like 5-6 yards. And the beast was rolling, man. The beast was just rolling out. It was here. There was a logical thing. Next thing to do was just give the ball to Marshall, and he would put the ball inside, and you will have a Super Bowl ring. But Pete Carroll decided to throw a pass, and that pass was intercepted, and the Patriots won. And everybody was, Pete Carroll, that's the dumbest decision in history of football. Pete Carroll is an idiot, blah, blah, blah. Pete was killed, right? And that's a study case, in decision. That's the result is, because the decision that he made was statistically the best he could have made. Right? What were the odds of that pass being intercepted were lower, right, than the odds that Marshall Lynch being stopped before. That was the odd. That how it was. That was the best decision, but the results were not good. And that case is that play is studied. Many people study. That's an example that you will find a lot of statistical. That's a typical example of resultism. Everybody forgot. If that play, if Russell Wilson would have scored, if the Seahawks would have scored that game, because the interception was right in the line, right? Pete Carroll would be a genius now. Seahawks would have 2 Super Bowls, 2 rings. Russell Wilson will be the greatest quarterback of all time. Stuff like that, right? Everything will be different. Everything comes down to one decision, right? And people forgot what is behind. They just focus on the results, right? Because that's what sells. Commentators, analysts can sell more if they talk about that. They have more ratings. Newspapers sell more. YouTubers will have more views. That's that is the thing. One of the, I guess Malcolm Gladwell talks about that in one of these books that Jim has here. What are these books? I don't know which book it was. He has several books. Michael, I guess it was here in Blink. Maybe not Blink. What's the other one? Oh, yeah, I think it's this one, because I didn't read this one, but I read that one here in Thinking Bets. Now this is a really good book. I wish my kids can read this book about, but these guys are just so focused on TikTok They don't pay attention to this one. But this is good analysis. Annie Duke has of this that play here. She was a professional poker player. And thinking back is really nice book. It helps a lot also in this business. And I highlight, and that's why I don't like when I see profits. Somebody is screenshotting profit, because why you do that, right? The only person that you are competing against is just yourself, nobody else. If you put something there, if I see something there, it just adds unnecessary pressure to, if I am losing or if I am learning how to trade, learning about markets, oh, well, this guy made it, right? And the statistics, if you go into these chat rooms, you will see those everywhere. Those posts, oh, $100, $500,000. Everybody's posting those things. Nobody posts a loss there. And the statistics doesn't lie. Statistically, only 3-5% are successful or consistent, right? It's also something that I don't consider to be a good head. Okay, now the market has come back. This high is not good. This is getting weaker and weaker. Let's see if this market can take. Okay. Oh, okay, but I didn't like the way how this happened. You know how it looks like somebody's pushing this thing up higher. It was here and then just boom, just keep going, like somebody is just pushing this thing. Somebody with power, just hitting. Okay. When I see that kind of action, I become wary, man. Okay, just a moment. I need to take this call. Hello. Hola, madrecita. ¿Cómo estás? Buenos días. Buenos días. ¿Madre?
Estoy bien sentada.
Oh, yeah. ¿Dónde estás? ¿Sigues en Lima?
Sí, bajito.
Oh, yeah. ¿Estás en la sala?
Estoy en la sala.
Oh,
el
yeah.
12 de marzo de estrenar.
Oh, el 12 de marzo. ¿De marzo o de abril?
De abril.
Oh, yeah, el 12 de abril regresas. Oh, yeah.
Me voy a ir con las ilusiones porque el 13 se casa el jardín.
Oh, ¿Carlos se casa? Oh. Oh, qué bueno. ¿Y con quién, madre?
Es una chica, enfermera.
Oh, ya, ¿su enfermera de él?
No.
No.
Trabaja en la clínica San Pablo.
Yeah. Oh, yeah. ¿Y qué haciendo? What are you doing now? ¿Qué estás haciendo tú ahorita?
Estoy conversando contigo.
¡Ay, chistosa! Graciosita, ¿no? Me agarraste ahí, señora. Ay, madre. Ay. ¿Cómo está? Sí, madre. Aquí estoy haciendo mis cosas ahorita. ¿Cómo estás tú? ¿Cómo te va todo?
Estoy bien. El clima, sabes que no es calor ni frío.
Oh, sorry. Thank you, yeah, thank you. Hello, I'm back. I'm sorry, I got to take that call. That was my mother. That was my mom. I had talked to her. All right, all right. Hey, yeah. Before you talk about what you didn't like, yeah, yeah. I mean, those are just personal choices, right? You know, when you are when you are in the market and you start, yeah, witnessing or watching how the market develops, you start to see the differences. You start to see the what kind how this movement is doing, right? How unfortunately that's something that we cannot teach that, right? We have to go through that to understand, for example, what tempo is, right? When the market is strong, for example, right? When the market has conviction, is one thing. Um, the way how this market was taken, the way how this high was taken during a period, it was a sudden movement. When the market was trading down here or somewhere in here, I don't remember exactly, but I remember, is the fact that the market just jumped, boom. It's like somebody was pushing that. Do you remember, like a couple of days ago, we were talking about how this trade is very valid, right? The market just, you know, uh, takes previous range highs or lows, and then if there is something serious, that reference is taken, the market comes back, in this case has a pullback, and then the market just keeps trading, working its way higher and higher and higher and higher. But that information, this piece of information, I think, after the fact is, oh, okay, I knew that was going to happen. No, I didn't know this was going to happen. I didn't know that. But this was something that, okay, I mean, the trade here is go with the breakout of this range, because you have 1, 2, 3. What this action is doing is just putting more stops on top of this thing, right? There was potential here for market trading all the way up to here, but the way how this was made, it kind of like, puts a yellow flag, a warning flag, on side, right? So be careful here, right? Especially after or before an announcement or before a news event like we have today at 2 p.m. That thing. And this will be something, okay? If this behavior keeps repeating, notice what happened here. Market come back inside this range, and actually the trade kind of like below 7, right? What can happen here if the market is again keeps going higher and comes back? Now we will have 4 pillars Y. This profile is getting wider, 3 wide. The odds that this market doing damage either to the upside or downside are not that high. Yesterday was one of those days that we can say that's not always like that, right? That's why these are not rules. These are just guidance, because we also have 3 days. 3 pillars wide here. We have 3 pillars wide, and regardless in market, we have a trending day. Same thing is happening here today. Now we have 3 pillars wide. I have seen these days, staying in this narrow range all day long, until 2 p.m. And then we have boom, big spike, quick break, trading back and forth, until 2:30 p.m. when Chairman Powell comes, start his press conference, and the market either stays up here until the round of questions, or stay down here until the round of questions, and there's another huge movement or another attachment, and the market closing right here again. Things like that. We never know what's going to happen. Right? But what I was trying to say is, if this kind of behavior keeps happening, this will be a market, you know. Right now, because this inventory is getting long here. It's getting long. From yesterday, we have a day, a very emotional day. I'm not going to miss a new high. Market make a new highs now. I'm not going to miss the market make a new highs today. Day. That was straight list. Now I am here. I'm getting back here. I'm jumping here. I'm ready to ride. I'm ready to ride the market to highs, to new highs. Because everybody has figured out the market right now. And I think that's very dangerous. It's very dangerous. Again, you know, you will be surprised. So you will be surprised how many times I will say I'm not interested in this market. You know, that expression you will hear from me multiple times, and you may ask, then why you do? Why you call it? How come you can call yourself a trader if you don't do nothing all day? Right? And that has to do a lot with what a trader is actually, right? Because that's the job. Most of the job is observing and just waiting here. Waiting until something just pops out of nowhere. Out of nowhere, something pops, right? We have seen this one. Oh, another thing, and this is something that you once I learned this thing is, you know, getting the market, okay, right here, for example, this day yesterday, the market is still inside this how many days range? 2, 4, 5 day range here, right? It's inside this day. Now it's a 6-day range. Including today could be a 7-day range. This one here. This we started from here to here, leaving this all-time high outside and leaving this two outside, right? In a trending in a range, here. And we traders buying exactly mechanically from mechanical references. I will go to that in just a minute as well. And it is the job, right? This is something, you know, it is the job of bigger time frame participants to take the market out of balance, you know, making these upside movements and trading higher is the job of bigger time frame capital. And that's why, you know, this kind of movements to the upside making new highs have that continuation, right? They're just going, they just keep going higher. Oh, okay, the market is just too high, we say, right? We say something like that. By the way, thank you for letting me know the microphone was on. I don't know what I did. I thought I muted that thing. Thank you, man. I appreciate that. I was saying, you know, we can believe how this market can keep running. It seems like it's going to break anytime, right? And it just keep going higher and higher and higher. I would just read your comment, man. That's funny. Thank you. Yeah. Okay. Oh, okay. Remember what we did yesterday? We took this thing, right? We took this day. We took the daily, and we just moved this trend line here. You know, this is pick your trend game here. Pick your trend line. Pick your trend line. What it's going to be? Okay. You got it here. This one doesn't have anything here. Huh. Wait a minute. If there's anything to the downside, let's extend this to the left. Huh. Actually, if I move it here, this will be this will come up to here. Yeah, this is just technicians do this all the time. Cancel left extension. Okay. Move your trend to the upside. We have a trend here. Move it to a little bit lower. We have highs here. And, okay, it happened before. It's going to happen again. Now I know, right? Now I know. Now I feel that. Finally I understand. Finally I got the market. You know, after 8 years of trading, gosh, how come I couldn't see this before? Now I know how to trade, right? The next thing the market is going to be bought from this level. Maybe not today, maybe tomorrow. Of today it's going to be bought from the 5200. Okay, that's support. Oh no. Let's move this a little bit higher. That's too low. Let's move this a little bit higher. Okay, right there. Where else? It's right here. Now we have this 5210. Okay. Not that. Let's use another. Let's move a little bit higher. Okay, this is better, right? Okay, 41 is support. If this market breaks, I'm going to buy from 41. Well, this 41. I'm not saying I'm going to do that, but I'm trying to just to guess, or I'm trying to speculate what traders can do. That's 41. Come on, man, this is what the market is right now, right? Is that, am I right? Why there? According to my studies, I did my due diligence, and the market is support. This is the daily low. The daily low is in right now. And that's how many traders can be thinking right now. And I have this range here. Let's duplicate this thing and move it up here, for example. It just fits perfect. Moving this down here. Let's use a Fibonacci, or let's use a market. Next time the market comes back to this line, I'm going to buy, and as time comes to here, I'm going to sell. Okay, that's nice. Nice trade. Everything works, right, until it doesn't work anymore. All the strategies work just enough for you to believe they work all the time. That's how it is. Now let's go and check another markets. Let me erase this. I don't like this. Let's do NQ. What's happening in NQ? For some trending higher. Oh, okay, look at this. This is very okay. This looks different than the weekly. This is 4-week range here. Huh. Actually, it doesn't look that bad. The daily doesn't look that bad in Nasdaq. There's potential here for upside continuation here. All right. Each market is different. Right? You can see the ES is different. Let's check the Dow. Boy, this is just have some unbelievable rally here. Gosh, man. The 200 is way lower. What about Nasdaq? No, so far from even far from the 50s. This is steeper, this line is steeper here. What's happening in the bond market? Everybody's waiting here. And look at what happened yesterday. I've noticed this spike. The bond market has a spike, and now it's trading in this spike here. No? This was rejected, but I don't trust it. I don't like this actually. The way I don't like this. This looked like short covering. It was looking like short covering here, and this spike just like throw a range there. Gold was having a good day. Let's check the daily. You know, the potential here is huge to the upside. You know, in days like today, FMC, this market can go back all the way up to here, all the way down to here as well. This is really dangerous. I mean, you can see like a support forming here, just here. Same thing goes here. It is clearer because the 30 is clearer. This kind of like gives this chart like some sense, you know, some potential for building some value here as well. Now, can this go higher instead of going lower and start a trend now to the upside? Who knows? The inflation numbers have been coming higher than expected. There was a spike in inflation. They are not trending lower. Huh? The Fed wants to see those numbers going lower, or just what is not going higher, not going back higher. And that's something that it's not happening. Now, this is the intraday. I cannot see the intraday. It didn't take its highs. Microsoft. Amazon, this is also quite dangerous. This one, and this one. What's happening in Amazon is we have this line here. This is support, clearly. This is not respecting this one. It's just clearing back and forth on this breakout. And this is the last. It's not uncommon to see this kind of market start getting short covering more, and then we have a gap. Next thing we have another gap. Next thing we have another gap. You know, just a squeeze. Market start to squeeze the shorts. You know, Apple also got bought from these mechanical levels. I mean, this from support, right? Got this low here, breakout, is bought. This level becomes relevant when with this low here. This trades below, it doesn't have any acceptance here. It rather start to cover, start a new rally, and all the gains that we have last year now are gone. We're back to not all the gains. My bad. All of the late gains, right? The second half of the year. This is July, September, and all those are gone. All those are gone. All right. And that's why I say, you know, you just got to know, put things in context. It kind of like, I don't like the word expectation because it kind of like, give you a bias, right? It puts your mindset into something. But there's something that's not unusual in days like this. Or I have this FOMC and this market is very thin. You will see. You may see something. You might see something. As the day develops, maybe around 2, you can see volume. Let's make this wire. Okay. If we have 2 p.m., market go higher, lower, or maybe around 1:30, but volume, after all the craziness that happened, volume it still remains the same. During the speech, during Chairman Powell press conference, this just may change. Instead of being down here, it could, okay, you can see this changing, volume coming to the market. I still don't see any direction. You may not see any direction, but there is changing here. Around, who knows? I don't know. I saw this happening. Sometimes it happens at 2 p.m. Sometimes it happens 1:30. Sometimes it happens 2:30. Sometimes it happens at 3 p.m. Right? And then it started to increase. Right? You may not wait until the period is over to see the change. And trading is about change. You may not see direction until, okay, you just have to wait, right? And then suddenly, okay, and that's the thing that has caused me so many issues, so many problems in the past, is when I expect something, and I expect something, that's when you start getting anxiety. Yesterday I was reading something about people who was depressed, lives in the past, people who is anxious, or people who got anxiety, lives in the future. And the thing is, get or come back, get your life or live in the present. In the present moment, it was what matters, right? Not what will happen or what happened. It's what is happening now what matters. Look at this, for example. Well, this is what do I do here? Right? I don't have a good high. Okay, I have this good odds, right? The market can keep going higher, but where the selling is coming exactly from the why to begin with, why I will be sell why I want to sell this market that is to the upside. Value is inside. Right? The buying is coming exactly from halfback. Okay. If there was anything here, if there was anything to the upside, you can see this is so far. It's a trending day. I mean, not a trending. I would call this I won't call it a rotational day either. I'll call this one time frame higher. Yeah? The day hasn't, any period has taken the previous period low, but it's getting weaker now. The buying that's coming is getting weaker now. These buyers here are different from the ones that have. These guys here, after they saw the market, okay, the market is going higher, okay, now I know the market is going higher. They come here. It doesn't mean the market is going to come back and check this right away. It doesn't mean that I am going to be short. It's just an observation. And you just carry those things. You just carry those things. And that's why Jim also says, one of the biggest bias that his students have is the weak lows, weak highs, poor lows. Right? We have the tendency to think that this is a reason to go short. Okay, now the market has bought from hardback. I am going to be short. I am going to sell this right now. There is nothing here right now. Nothing here. I didn't see an opportunity. The market didn't show its sun. The market is doing anything here. This is just short-term trading going on here. It can go in any direction here. The fact that it's 4 pillars wide now, all the times more thing right. There's accumulation of value, of volume here. Compare this day to yesterday. Remember, we have kind of like a 12,000 at the opening, 12,000, I believe. No, very thin, right? 3,000 here. The biggest one is 4. Not that much, right? No, the pressure. Look at it, you have a bunch of negatives, a bunch of positives, a bunch of negatives. There's something here. There's something here. There was a lot of pressure to the downside. You can. Okay, wait a minute. Okay, wait a minute. This is wait a minute down here. But this will just overcome. This becomes. The fact is, it becomes white. They will just, these shorts here were eaten. Well, there was absorption here. They were just overpowered and were forced to cover. It didn't work. The trade didn't work. Positive, negatives, and the negatives are not that high. Look at here, very thin market here. And this is kind of like a zooming in too much right here, right? And you can see here. This gives me another light, and I choose to see this. I am monitoring this histogram, these data values here. I started to watch this like 2 weeks ago. Not that much. I am, doing something here. I still don't know what to do. I am observing this. This level that I have here. What it is? This level that I have here. Oh, this one. Is based on this data that I have here. There was just big volume coming in, directional volume here, and that's why I have it here. But as I say, you don't need this if you don't have to, because you have POC here too. And there's a lot, there's a lot of distributions that we have yesterday. Okay, I guess I'm going to, unless you have any question, unless anybody has a question, I'm going to call it a day. I may come back later, just before FMC, just to see what happens here. If I see anything, I will just post. I will put it on Discord. And I hope you have a really good rest of the day. See you.